Starting in 2022, Forex bots became all the rage. But after 5 minutes of investigating, I would never put a fucking dollar into a Forex bot, let alone multi-millions. Now, for those of you who do not know who I am, my name is Stephen Brooks. I'm a hedge fund manager who specializes in trading systematic options primarily on the S&P 500 index. Now, as I stated, 2022 was the birth of the Forex bot. What you had were internet marketers, not investors, not market analysts, not traders, but internet marketing experts getting their hands on Forex bots. Companies like NERP, companies like EasyFX Algo, and countless other brands were able to produce a back test that looked good on paper and sold it to tens of thousands of customers all over the world, exposing them to risks they could not have imagined. Now, as an aside, in our fund, which is up over 18% over the past 6 months while the market is down, we don't just run back tests. Running a back test is step 1 of 8 to determine whether a strategy has a genuine edge. Now, back to these absolute piece of garbage Forex bots. These internet marketers ran back tests that produced incredible looking results. So how did they do it? Well, in a number of ways. Number one, the overwhelming majority of these bots are Martingale bots. A Martingale strategy is a gambling strategy. You bet $1, you lose, you double the size. If you lose again, you double again. And you keep doubling with the hope of having one winning trade before you've lost everything. Now, running a back test to show that a specific Martingale strategy would never have blown up in the past is something only an internet marketer would do. Something only somebody with zero investment experience would do. Anyone with even a hint of market knowledge understands that if a strategy even has a 1% chance, or quite frankly, like a 0.001% chance of blowing up, it is absolutely no edge whatsoever. Number two, they use leverage. After Dodd-Frank became law following the great financial crisis, the maximum leverage available to U.S. customers on Forex currencies was capped at 50 to 1. These back tests from these internet marketers only work with leverage of 200 to 1 or even 500 to 1. So in order to participate in these Forex bots, U.S. customers are required to send their money overseas. In fact, to territories not too far away, I'm not even joking, from Epstein Island. Meaning there is no regulatory body that you can go to if something goes wrong. Now, in the United States, FDIC deposit insurance protects customers at all regulated brokers. Now, because none of these Forex brokers, are U.S. regulated, that protection does not exist. Number three, here's a real doozy. There's no centralized exchange in Forex. The price of euro-dollar pair on broker A and the price of euro-dollar pair on broker B will, in the overwhelming majority of cases, be completely different. Now, some will say that sounds like an arbitrage opportunity, but it means that you have no way of knowing what fair value is. Fair value is whatever the broker says it is, not the market. Number four, the broker is your opponent. Let me repeat that again. The broker is your opponent. Because there is no centralized exchange or centralized price, the broker acts as what is known as the dealer. So when you buy lots of a pair, they sell those lots to you. When you sell lots, they buy those lots from you. That means the broker profits when you lose. These Forex brokers make money when their customers lose. So to summarize why I would never put a single dollar into a Forex bot, let alone millions of dollars that I have at my disposal, in order to make these strategies look successful on a back test, these internet marketers needed leverage that is at a minimum 4 times greater than what US regulators allow. You have to park your money overseas, literally at fucking Epstein Island, with zero insurance, and you are trading against a broker whose financial interest is directly opposed to yours. Does that sound like a situation where you are set up for any level of success? That is exactly why, in July of 2024, thousands of Forex bot customers woke up one morning and found their account balance was zero when something happened that did not appear in the back test run by internet marketers. When you put your trust in people who have zero investment experience, you are exposing yourselves to risks that you cannot even imagine. And to make matters worse, these Forex bot providers display their results, and the way they do it is deliberately misleading. If I have $1 million in my account and I'm holding a position that is underwater by $1,000, my account is worth $999,000. But Forex account results are presented 2 ways. The number displayed most prominently shows the net liquidation value of closed positions only. What they bury is a total account value, including all of the open positions. Now, I just figured out how to do this earlier today, so let me see if I got it. Perfect. So what we're looking at here are these marketing materials for these various bots. The first thing you'll notice is the leverage here is 500 to 1. That is 10 times greater than what a US regulator will allow you to do. The money is at a company called Ox Securities, which is registered in St. Vincent at the Grenadine. Who the fuck has ever even heard of St. Vincent at the Grenadine other than Epstein Island? Now, here's the real kicker. When you take a look at all these numbers here, they show an absolute gain of 17.69%. That's fantastic. It shows a daily gain of 0.2% and a monthly gain of about 65 basis points. That's pretty good. Now, they highlight, obviously, the good numbers. They highlight the profit. What's a little bit hidden is the drawdown at 44.57%. But here's the real kicker. When you look at this chart over here, the red line, when you hover over it, is obviously very apparent, right? Red is going to catch the eye more than any other color. And when you do that, all it highlights on this actual chart are the results of closed positions only. So if you take a look at this, hey, we're making money. Okay, we have a little bit of a drawdown here, but we end up making it back. And in total, yeah, it lines up with that 17.69% return. But as I said, for marketing purposes, they are likely purposefully misleading to the point where they, again, only really try to show you the P&L of the closed positions. If you take a look at the open positions, holy shit, it's a completely different ballgame. So as you think you are making money, April 2025, May 2025, June, July, actually what is happening is you are losing money. So when you look at this page right here, you think it's up 17.69%. Actually, it's down 22.37%. Wow. All right, let me figure out how to do this here. Wow, I'm a lot better than I thought. Now, we did this one. Perfect. Now, let's talk about what we actually do. And this may sound remarkably basic by comparison to these total scam job Forex bots. We trade US listed options on US registered brokers. Whoa. Our money stays in the United States. Whoa. Our deposits carry insurance up to a federally mandated limit. Whoa. Our broker is paid a commission. They have no financial interest whether we win or lose. Whoa, what a novel idea. And our leverage is regulated, which means we could not even produce a back test for a Martingale strategy that looks effective because the absurd and unrealistic leverage required to make it work simply does not exist in the United States. That is not a limitation. That is a feature. Now, here's the good news. You don't need crazy, ridiculous leverage. You don't need Forex bots. You don't need any of that. All you need is $100,000. Now, with that being said, no, you are not going to get a guaranteed 3 to 5% every single month like the operators and owners of these Forex bots market to you. But at the $100,000 level or above, you are able to trade small enough in size to generate a sufficient number of occurrences. And rather than trading somewhere where the edge is working against you because the broker is competing against you, you can trade something where the edge is genuinely in your favor. In our fund and in our software, we only sell options. The reason we sell options is because we do have an embedded mathematical edge in our favor. Not one that we created, not one that we tried to manufacture like internet marketers do with back tests, but an edge that exists naturally in the market. It is simply selling insurance. When someone buys an option, they are buying insurance. When someone sells an option, they are selling insurance. Because the option seller always takes on more risk than the option buyer, the market compensates the seller for that. All you need to do is place a number of small trades throughout the day, each one carrying that mathematical edge. And this is a simple strategy. Trading US listed options, what an idea. On US registered brokers, oh my God, nothing exotic, nothing offshore has outperformed the market by a factor of 18 over the past 6 months. Meanwhile, the people using these Forex bots are going to bed each night, in most cases, completely unaware of the extreme risk they are carrying with their hard-earned money. Money that they never would have put at that kind of risk had they know what you now know. So, if you are interested in achieving this kind of result, trading, oh my God, this is crazy, get ready, US listed products on US registered brokers, there are 2 options for you. If you are an accredited investor, there will be a link below this video where you can express interest in investing in our fund. We trade, crazy I know, S&P 500 index options every single day. We trade 0 days to expiration, so we have no overnight risk. If you are not yet accredited and you want to learn how to do this yourself and use our software to place the trades automatically in your own account, there will be a link below this video for you as well.